Key Russian banks being kicked out of the international SWIFT bank messaging system. It's causing a lot of uncertainty for other banks around the world. And Leslie Picker joins us with the latest on that. Leslie.
Hey, Andrew. Yeah, uncertainty being the key word here. Barring some of Russia's lenders from the SWIFT messaging system could have ripple effects that reach Wall Street. Any firm that had a derivative or swap outstanding at the close of business with a sanctioned firm could be met with a counterparty that's unable to pay. Now, the key question is where that counterparty settlement risk lies and whether that risk is systemic. An investment strategist at Credit Suisse warned in a Sunday note that banks' inability to make payments due to their exclusion from SWIFT is the same as Lehman's inability to make payments due to its clearing bank's unwillingness to send payments on its behalf. The same thing happened in March of 2020 when concerns about supply chain disruptions and lockdowns caused missed payments, the Credit Suisse strategist noted. Analysts speculate that European banks will have far more risk exposure than U.S. banks do. This morning, we're seeing much steeper declines in shares of, say, Deutsche Bank and Barclays than that of their U.S. peers. Among the big U.S. firms, those with more European exposure could feel greater effects from these sanctions. Goldman Sachs, Citi, and J.P. Morgan derive the biggest proportion of their earnings from Europe. They're all lower in pre-market trading this morning. Andrew?
But, Leslie, I guess part of the question this morning is, Wall Street lobbying Washington about SWIFT ahead of this weekend's actions?
They were, which suggests that a lot of these big banks were not super supportive of the idea of cutting several Russian lenders off of the SWIFT messaging system. Their rationale for doing so, and this is based on people I've spoken with that are familiar with the matter, they believe that that would actually hurt Russian consumers more than it would hurt Putin and his allies. They also think it could be just another trigger to send inflation higher than it already is. Additionally, their belief is that Russia has already been in the process of creating an alternative to SWIFT, and this would strengthen their motive to be off the SWIFT system entirely and potentially push them closer into the arms of China as an ally and away from the West. So those were kind of the rationale points that they were communicating to Washington. That said, it seems like over the weekend there was an about face, despite the fact that many in the Wall Street community did not believe they would actually take this step.